Hello, Maverick Traders. This is Rob Reinhold. It is nice to be here. January 10th. I can't believe we are in the second week of the new year, 2023. Let's jump into the market. The market was quiet today. It was a quiet day. Now, look, we had some big fireworks yesterday, big moves. We had a huge move up in equities, and then it sold all the way off. A lot of energy was expended. Today was one of those days where the market kind of had a little bit of a hangover. And so you can see here the markets, the S&P was up slightly, up 0.7%. The world indices up about 0.5%. Crypto is actually looking pretty good right here. We'll take a look at the charts, up 1% in the basket. Gold up slightly, oil up slightly. So you can see here, this was just a very slightly bullish day. We didn't have a lot of news, and really the only news we had was that we did hear from Chairman Powell. He did not say anything new. He did not say anything to spook the market or anything to encourage the market. He stayed on script, and it was pretty much a boring day as far as news goes. So when we look at the charts, let's take a look and see where we actually are in the cycle. Here we have the S&P, and I'm just going to draw out a couple points here. This 200-day moving average and this upper trend line has been the wall. Every time we get up to this point, the market has failed. We got up to it in April, failed. Got up to it again in August, failed. Got up to it in September, failed. So every time it gets here, it fails. We have no idea where exactly the market is going to go, but what we do know is that the market's moving waves. So big wave down, big wave up. We've now started this wave down. Now at this point, we said last Friday that once the market broke out of this little channel here, that we were likely to keep going up. Now, as you can see here, we are running into some big time resistance here, and the market is sitting right there. So the S&P is at resistance. We could actually pierce above this resistance, and we still have a little bit of ways to go until we meet this big downtrending wall. So short term, this market is kind of playing with this resistance area. As you can see, today's candle, a very strong candle. We closed at the high. That tells you that there is still buying out there. So I think tomorrow is likely to be another up day, but we are right at a resistance level. So if it is an up day, I think it's very mild. And at any point, we could see a reversal at this point. If we do close up above this line, where we get another green candle and we close up above, I think you have to look at this and say, hey, we're very likely going to go up to test this 200-day moving average and downtrend line. If we take a look at the world index, you can see that the world index broke this line, broke this downtrend line back here in November. And we came down, we spent a little bit of time below it, but we popped back up. We are again right at resistance levels, but the world market looks much, much better. The world market looks like it actually may be turning, and we might be able to say the downtrend is officially over. It's a little early to say that until we get, again, we need some higher highs, some higher lows until we can get into that. But the world market is looking better. Regardless, when you take a look at the short term, over the next 24 to 48 hours, we have to lean a little bit to the risk on side. Take a look at cryptos. Cryptos are trying to make an interesting run up at this resistance level. Lots of resistance here. We'll have to see what happens, but we're closing right there. If we do break through, we could get a little short-term run in crypto, and you can see the next resistance is going to be up here. That's about 6 to 8% higher. If we do hit this wall here, then we are nothing but range-bound. We're just simply range-bound in this area. But on a breakout, I actually can see buying cryptos for a short-term trade as a viable opportunity. When we look at our scoring system, we have to say, okay, the market is above the 20-period moving average, it's at the 50-period moving average, and the slope of both of those lines is going nowhere. We're at a +1, a very, very mild +1. Let's take a look and see what's on the calendar here. The only thing we have on the calendar for the next really 48 hours until the US CPI on Thursday is tonight we do have Australian CPI. That is likely to move the Aussie. And I think the Aussie is definitely a currency to be watching tonight because the CPI is going to move it. Forecasted for 7.2, obviously higher than that is going to show that the RBA is likely to be more restrictive in their policy. That's going to strengthen the Aussie. Below that, it's likely going to weaken Aussie. We'll take a look at the Aussie specifically. Let's take a look at these currencies and see where we stand. 24 hours ago, this is where we stood. This is what was moving 24 hours ago. We had Bitcoin and Ethereum at a +3. We had Euro, Bitcoin Cash at a +2. And we had a whole bunch of currencies there in the 0 to +1. Remember, we're only interested in +2 and -2. If it's in between, +1 to -1, it means it's not moving right now. We're not interested. We only want to trade the things that are moving. We'll keep an eye on things. But as you can see here, dollar and yen were at a -2. Today, we did get a move up in cryptos, and the best performer was Cardano. But you can see Bitcoin and Ethereum had a nice run as well, up 1.5%, 1.75%. We come over here to currencies. I want you to take a look at these numbers. These are really small numbers. Over a 24-hour period, these numbers are very, very small, meaning that today was not a great trading day. Trades just didn't go anywhere. The best trade you could have made was Euro-Yen, and it went up 0.3%. It's just not big enough to really make any sort of money. Today was a consolidation day. Let's go in and see what actually is the scoring and what are the potential pairs that we're going to be looking at. Let's take a look first at Bitcoin. We have Bitcoin at a +3 24 hours ago, and you can see the last 24 hours has been a nice run from 17.2 up to 17.450. Okay, that's a nice run. We know what happens after runs. We likely get either pullbacks like we got last time, or we get bases like we got off of this. We are likely up at the edge of resistance here. And if we go here to a daily chart, I want to show you that we do have some good overhead resistance in this area. We do have to be thinking to ourselves, okay, there is overhead resistance. There's possibly a little bit of a run left in Bitcoin, but really 17.7, 17.8 is really about as optimistic as you could possibly get. If that fits within your criteria of what you're looking for in a trade, okay, you could absolutely look for a shorter term trade here on Bitcoin. That being said, we just had a run. We know what is likely to happen after runs. We're likely going to get a base, or we're likely to get a pullback. At this point, we don't really love Bitcoin right here after 24 hours of a big solid run. We'd be much happier getting in off of a pullback to the 17,300 area, or a base and a breakout above the 17,470 area. Those are going to be the 2 points on Bitcoin. If we check in on Ethereum, you can see we're also had a pullback, and Ethereum's having a hard time breaking above this last high. So for me, Bitcoin looks better than Ethereum here as far as the cryptos go. I want to check in on the other currency we had, the euro. The euro we had at a +2, and you can see over the past 24 hours, it had an okay run. It based for about 24 hours, broke out. This is an okay run. These are not great runs, and frankly, I don't see any great runs happening in the next 24 hours either. On Thursday, we have a very major report, the CPI out of the US. I think these markets likely tread water until we get to that report. Then I think everything has a big explosion and we get some nice moves. Over the next 24 to 48 hours, I think we are grinding in these areas. So if you're going to make any trades, I think it's very important to really look at what you're looking at, have the reasonable expectations for where they're likely to go over the next 48 hours, and you really want to pair up the strongest against the weakest. So the euro right now is the strongest Forex currency. Let's take a look at some of the others and see if we can find anything interesting. Now, I'm going to spend just a tiny bit of time here on the dollar and the yen, because the dollar and the yen were at a -2. We have a risk-on bias, meaning that these two currencies, the yen and the dollar, are risk-off currencies. So they typically go down when you have risk-on. So we want to be looking at these two pairs here. So as you can see, dollar, we had a big fall. We had a little bit of a rally right up to a resistance level, and we're starting to get some selling here. Dollar looks good for a short. We come over here to yen. Yen's doing more of a low base kind of thing, but you can see here we did get a little bit of a bounce up to this trend line. Both dollar and yen to me look like great shorts. So The dollar and yen I really like on the short side over the next 48 hours. The problem is, what do you buy against it? Euro looks okay. Swiss franc looks not good at all. Pound, okay. The pound is basing here. You can see here, we've been basing here for about 3 or 4 days. We've had a couple of false breakouts. So I'm looking at this pound saying, I don't want to buy one of these false breakouts. These upper shadows, at one point they were breaking out. It looked like it was running. I don't think the energy is there for the pound to break out. I just don't see it there. We move on to the CAD. The CAD is looking at it like a 0 to a -1. I don't want to buy CAD here. The Aussie was our favorite currency for the week. And you can see here, we had a nice run last week, and we've had a really good pullback. Now, this is where we like to take positions. We like to find uptrending currencies, and we like to buy them off of pullbacks and bases. This absolutely fits the criteria. So for me, I do like Aussie. Here's the problem. We're very, very early in the turn of this Aussie. We have the CPI report coming out in about 3 hours. I'm not going to stick my neck out in front of that, but I will be watching that CPI report on the Australian dollar. If we do break out to the upside, I like Aussie quite a bit. Right now, not ready to go. Give me a few hours. I will reevaluate it. We take a look at the Kiwi. Boy, the Kiwi has just had a pullback, but you can see it's not showing that it wants to really bounce. At least the Aussie was showing that it wanted to bounce. Look, I am more long than short on this, but again, I'm looking for the best. So for me, the best is likely going to be Aussie if it bounces after the CPI report against the dollar and the yen. The only changes we've seen over the past 24 hours is that the yen has weakened a little bit. Other than that, the board is the same. Bitcoin and Ethereum look good, but they are up against some resistance levels. Euro is a +2, but I'm not too excited about it. I'm really waiting for that Aussie. This to me is the trade. Right now it's a 0. It's starting to move. If we can get some movement off of that CPI report, I think it's a no-brainer that we pair up Aussie against yen and Aussie against dollar. So those are the two trades that I'm going to be looking at over the next 24 hours, is long Aussie dollar, long Aussie yen. It's clear to me that I like the Aussie if we get a good move off of that CPI report. The question is, what do we play it against, the yen or the dollar? Now, whenever you have a question, which currency to play it against, a very easy trick is just to pair up those two currencies. I'm going to take a look at dollar yen. And I'm going to say, okay, which one, if I had to buy this currency pair, would I want to go long or short? And right here, right now, we're looking at over the past, this is about the past 48 hours. You can see there's literally been no difference. Dollar yen has gone nowhere. It's gone in a very tight range. Very tight range here. There's not a lot of difference here right now between dollar and yen. So if I had to buy one, if I had to buy this, or if I had to make a trade, would I go long or short? At this point, I'd go long, which means that the dollar is stronger than the yen, which then tells me that the pair I want to take a look at is Aussie yen. Because if I buy the dollar before the yen, it's telling me that the yen is likely the weakest currency at the moment. We are getting a really nice pullback, just like we like to see on an uptrending chart. We like to see a pullback to a previous resistance level. This trade looks okay here. As I said, I am not looking to make this trade until the Aussie CPI report comes out. If we can get a nice move off the Aussie CPI report, I will absolutely look to grab this. I might be a little late, maybe at 91.50, 91.60, but that's what I'm going for. My target here is going to be somewhere up around probably about the 93, 93.20 area. Somewhere up in here for that next run. But look, this is going to be a 2-day trade to get to that point. Bring that down a little bit. Okay, maybe somewhere around the 92.80 area is going to be the target. I'm waiting for that CPI on this one. If we can get a nice green candle at that CPI, We can pierce above this parabolic SAR. I'm in. Right around 91.50, 91.60 is going to be an entry point on that. Other than that, that's about it. I don't want to keep going through trades because remember, you can always find a chart setup. If you look at different time frames, different currency pairs, you can always find a chart setup. That's like the easiest thing in the world. It doesn't mean it's going to be a good trade, and it doesn't mean there's going to be enough energy in there to make any sort of meaningful money. We want to be very aware of that at Maverick and only trade when there's energy and there's moves happening. And when there's no moves happenings, we don't want to do it. We want to just stay out and conserve our capital and wait for those moments. If nothing triggers until Thursday, CPI for the US, so be it. That will be our next great trade. To wrap this up, we think that over the next 24 or 48 hours, this market is building energy, not expending energy, which means that any moves are likely to be smaller, and really, the trading isn't going to be as good. We like to be in markets when they are expending energy, and that likely doesn't come until the Thursday CPI report at 8:30 a.m. Eastern Time. So be very patient over the next 2 days. If you have to take a trade, be reasonable with the trade. Be fairly quick on your exits. Don't expect there to be big moves because we just don't see that right now. The next big move is likely going to be Thursday. And if you want to wait till Thursday, then that is a great idea. Keep your powder dry. And when that CPI comes out, let's get ready to pounce on something. Thank you so much for joining me. That is the Currency Recap. Goodbye, everybody.